कई challenges का सामना है, तो ये भी पूछेंगे आज के अपने मेहमान से, और वो authority भी हैं कि way forward क्या है. तो बगैर मज़ीद आपका इंतज़ार करवाए, let me introduce our guest tonight. We have with us Mr. Martin Reiser. He is the Vice President of World Bank South Asia region. Many thanks indeed for joining us tonight on the review. And let me ask first question, as we all know that Pakistan is going through difficult times as far as its economy is concerned. And the World Bank is closely working with Pakistan to suggest way forwards. And we understand that the World Bank has suggested way forward to the next government how to deal with the economic challenges. Can you elaborate what are those proposals and suggestions that Pakistan can implement and deal with the problems?
Well, thank you very much, first of all, for having me on your show. It's a pleasure to be back in Pakistan, even at difficult times, as you said. We launched this week the Reforms for a Brighter Future initiative. And I think it's important that, just to mention why are we calling this initiative? It's an initiative because it involves a discussion with a wide range of stakeholders in society, which has already started several months ago, and so this week was just the launch of the final product. But really what we want to do is not just make a proposal to the next government, but put a proposal out there, just as Pakistan is going into general elections in a few months' time, for society to discuss these ideas, because it is our conviction, also based on experience, that unless people understand the purpose of reform, unless they own the reform, unless they push government for reform, it's much more difficult to sustain reforms and to implement them effectively. So the Reforms for Brighter Future, time to decide, set of policy notes really cover 5 important shifts. The first is to tackle the human capital crisis. That's a silent crisis. It's not sufficiently appreciated, but it has major implications for Pakistan's future growth, because children grow up with insufficient health, insufficient education to grow into productive adults. And as a result, Pakistan is not using its human potential sufficiently. The second is the fiscal crisis that is much known and talked about, and that clearly needs to be tackled for Pakistan to lower inflation, to lower macroeconomic instability, but also to have the resources available to deal with the human capital crisis. And then the third shift is really to open up the economy to more competition, to attract more investment, to make the economy more competitive, improving the business, regulatory environment, etc. And then 2 more shifts. One is in agricultural policies, and the other one is in energy policies. Both areas that have benefited from a lot of government attention, but in some ways that attention has been misguided. It's gone into subsidies that have not been used productively, and as a result, both sectors are operating less efficiently than they could, and are consuming more resources than they should, leaving insufficient money for the investment into increasing agricultural productivity and into expanding Pakistan's renewable energy sector, for example. So those are the 5 shifts that we're suggesting. They're not particularly new in terms of the themes that we cover, with the exception perhaps of human capital, which has not received as much attention in the past. But really what is new about this initiative is that we want to involve the whole of civil society in it.
Yes, Mr. Martin, the timing of your notes is very critical. We have not seen any such policy notes from the political parties. Those are going to contest upcoming election, but the notes are coming from the World Bank, which is very important. And I hope these political parties listen to the World Bank and the other people who are talking about reforms in Pakistan. The question is, why do you put the human capital above even the fiscal sustainability issue? Because all we hear in Pakistan, all we read in Pakistan is more about the fiscal sustainability, the debt crisis, but not about the human capital crisis. So what is the reason behind that?
Well, if you look at economic development, basically, across countries, around 60% of a country's wealth comes from its human capital. The richer a country becomes, in fact, the more the quality of its human capital, the quality of institutions matter, the less important is the physical and natural capital that a country has. And so, naturally, it has to be in the center of attention of any long-term development strategy. Now, obviously, it's linked to the fiscal crisis, because one of the reasons why Pakistan has done so poorly in human capital over the last 3 decades is that it hasn't invested much in it. I mean, collectively, health and education have about 2.5% of GDP. That's half of what India invests. And it's less than a quarter of what upper middle income and high income countries invest in human capital. So clearly, it's a problem of resources. So solving the fiscal crisis, reallocating spending from wasteful subsidies, from tax expenditures, etc., towards areas such as human capital will guarantee economic growth beyond just being necessary for fiscal stabilization alone.
So you've mentioned about India. In 1980s, India and Pakistan were like equals when it came to the economic growth. But now India is far ahead than Pakistan. India is growing more than at 6% rate, and Pakistan is growing sometimes 5%, 6%, and there is no consistency, and we drop to 2%, 3%, sometimes even negative growth. So what is the difference between India and Pakistan? Why India is so far ahead than Pakistan right now?
Look, I think we need to go back a couple of decades. India had a major economic crisis at the beginning of the 1990s. It took that opportunity to do some fundamental reforms, to open up the economy, to increase competitiveness, to have the state retreat from some of the sectors in which it was very dominant, to accelerate privatizations. None of this was easy. It was sustained over a long period of time, but it had significant impact on galvanizing investment, on mobilizing additional domestic savings, but also some foreign investment that came into the Indian economy. I think the second is that India has, since that time, stuck to fairly conservative macroeconomic and fiscal management. Pakistan has repeatedly had to go to the IMF to seek bailouts. India, after that reform in the early 90s, has not had to do that because it's basically lived within its financial means. It has increased its revenues. It has therefore created fiscal space to spend more on priorities. It's increased public spending on infrastructure. It's also spending more on human capital, although even there India could do better still. And growth and macroeconomic performance are linked. It's much easier to have good fiscal performance when you're growing. It's very difficult.
So do you see the role of the political stability as a key factor which is there in India but not in Pakistan?
Well, I mean, political factors surely play a role in creating the sort of consensus around key pillars of an economic growth and development strategy. And what has happened in India is that some of those pillars are basic, competition, market-based, open economic orientation, sound fiscal policy management. And I would mention a third factor that perhaps is important here. India, over the last 3 decades, has experienced a dramatic transition, demographic transition. Fertility rates have declined, life expectancy has increased, and as a result, what India is going through right now is the peak of the demographic transition boom. Right, where the share of the workforce and the aggregate population is increasing, the dependency rates are declining. That means households have more money to spend on and to save and invest, and don't have to just care for children or for the elderly. That is a temporary window. India could do more to utilize it. It has still not a sufficiently high labor force participation rate. But Pakistan is still at the beginning of that process because its fertility rate has not really declined that rapidly. So if Pakistan took measures in the human development sphere to bring fertility rates down, that would allow it also to go through that demographic transition. So that's a third factor. But I think it's a combination of these factors and the fact that they have benefited from enough consensus that despite of changes in government that we've seen, those basic pillars have been sustained over a period of 2 or 3 decades.
Since we are talking about India-Pakistan comparison, and you suggested, or World Bank suggested 5 policy notes, how critical is the regional connectivity? Because one of the issues or one of the reasons that people feel that Pakistan couldn't grow as otherwise it should have been, because Pakistan live in a region because of geostrategic political region, it could not realize the true potential of regional connectivity. How do you think this India-Pakistan tensions and lack of trade is really affecting Pakistan's economic potential and trade potential?
Well, I think surely it would help both sides, if there was more connectivity and more trade, and we know, and I don't feel I should comment on the reason why there isn't. It would clearly be beneficial in terms of, in multiple dimensions. But I think we should also recognize Pakistan has access to the open sea. It could be a very competitive trading economy through the port of Karachi. The fact of the matter is that despite of having a reasonably good geographic location, Pakistan is one of the most closed economies in the world. Less than 9% of GDP go to exports. And that is a reflection of policy choices, making imports very expensive, creating incentives so that enterprises are basically disinterested in exporting. They focus on the domestic market. But also a regulatory and policy environment that creates all sorts of distortions that make it more attractive to invest in real estate than in productive activities, for example. And so the resources that Pakistan have are not used as effectively as they could. As a result, Pakistan's competitiveness is low, and its connection to the outside world through trade is more limited than it could be. And I think that's regardless of what happens in the region, because Pakistan could have access to markets in the Gulf, in Europe, and in other parts of Asia. So I don't think that is a primary limiting factor at this point in time.
So the higher duties are one of those things where, because of those higher duties and taxes at the import stage, the trade is restricted and there is a bias against the exports as well. So now there is another phenomena, the restrictions on imports because of our external sector crisis. So where do you see Pakistan after 2 to 3 years if this continues? We have higher import taxes and duties, and at the same time we have also restriction on the imports. So what is the message for the foreign business?
Well, I think, these things are obviously connected. Without solving your underlying fiscal vulnerabilities, and I think you can do that by looking at measures to reallocate spending in ways that are more promotive of economic growth, and I mentioned some of those, but also by broadening the tax base and bringing in more revenues, that would allow you then to have a fiscal policy that gives you the necessary buffers to manage a more market-oriented, a more open foreign exchange policy. Pakistan has gone through periods of badly mismanaging its foreign exchange policy. It's persisted with an overvalued exchange rate for periods of time that has badly hurt export competitiveness and done little actually to support domestic producers either, and has been very expensive because it has been only possible through either heavy import restrictions that increase the costs for domestic producers and exporters, or through losing reserves that create macroeconomic stability. So fiscal policy, monetary and foreign exchange management policy are linked, and they in turn are linked to your ability to have a more open market-oriented, competition-oriented, foreign trade orientation. And so what we argue, for example, in the reduction of trade duties is not to do it overnight, to do it gradually over time, because you can't afford fiscally to get rid of those duties immediately. But you can provide that perspective. And the one thing that investors really are looking for is predictability and certainty in the environment. They want to know, if you're going to put $1 billion down today, you know that you need a 10-year period to make a return if it's a productive investment. Any investor that is attracted with returns over, a year or two is probably in activities that are not going to be that great for economic growth in the long term, right? So you want that long-term orientation. Well, you're only going to get that if people believe that the environment in which they're operating is going to remain reasonably stable over that period of time. And that requires you to have the macroeconomic buffers as well as the commitment to maintain regulatory policies that Pakistan has been missing